If you're wondering when is this when is this pain in the stock market is going to end? When can we expect this huge, massive sell-off that started literally since the beginning of this year? At some point, we have a little bit of relief, and then we had war, and then we have a little bit of more things that are just, contributed to what we're seeing now. And every single day, I mean, every single day for the last 2 weeks, the market is being down. Even on days when you have some sort of neutral slash positive-ish news, boom. Few gains don't last. So let me share with you my thoughts on when we can expect the market to kind of bottom down, right? Meaning when all of this sell-off will stop and we can go back to not only recover, but also start the next leg of the bull run. Meaning when stocks can go up or going back to 2021 and 2020 when stocks always go up. Now, that's not true. If you kind of follow the news a little bit, you cannot help but have heard about inflation, the war in Ukraine and Russia, and maybe not China lockdowns. Yeah, because China and some of the territories like Hong Kong and Shanghai, they really are on top of this zero COVID policy, meaning they really don't want to open up or to go back to what life used to be until nobody, and I mean nobody, is COVID free. So, by looking at when we started this year, so year to date, the S&P 500 is down 18%. The NASDAQ is even worse. The NASDAQ is like 28%. And at the bottom of today's session, it was down to 30%. If you take the Dow Jones, it's a little, it performed a little bit, only down 13%. But if you take the Russell 2000, which is the index where we have the small companies, it's 23.5%. So still, this is what we call a bear market. So I'm showing you to kind of give you the facts around where we stand, all right? And where we stand is we are in a bear market. Now, until we have these three things, or at least one of things resolved, because right now it's just in this weird situation for markets and investors, because the way things work, it has a lot to do with psychology, right? Because it's about money. And money, people think it's all about math. No, money is 90% psychology and only 10% the math behind it. Because when your stocks are dropping, you say, okay, I've been here before, so it's going to recover. But it doesn't. The next day it drops and you say, okay, maybe this is an overreaction as sometimes, but not. The next day, it's even more further down and you start thinking, maybe I need to sell. And you start selling. Maybe not your entire portfolio, I mean not your entire position, maybe half, or maybe a third because you expect it to go back. And then the following day, the following week, boom, same thing, over and over and over and over. At some point, you want to just get out, especially if big money is also pulling out of the market. So it creates this, kind of down spiral where everybody is trying to take money out of the market. And at the same time, you have other people betting that the market will continue to go down because of the bet on other people thinking the way I just explained, and that it just creates this spiral where it doesn't end because there is uncertainty. I mean, right now, it doesn't matter if you are in bonds, in stocks, in crypto, in commodities, in gold, nothing is a safe haven. Even if your money is sitting on a savings account, it is not producing any type of money. All right? Now, this is because not only we have inflation, and because of inflation, people are thinking, well, it is not slowing down, and because of what is happening in Ukraine and Russia, I mean, I don't expect this to slow down anytime soon, at least as quick and fast as we want it to happen, because this creates shortages and supply chain issues, which are also kind of deepened by what is happening with China lockdowns to some extent. All right. So it means the economy is going to slow down. It means growth is going to slow down. It means the money is going to be more expensive. So if money is still going to be expensive, and if companies are already starting to kind of fire people, well, maybe it means we're going to be in a recession. So everybody's kind of like, man, I don't want this to happen, so let me just take my money out. Now, this doesn't mean things will remain this way indefinitely, because nothing does. At some point, it has to stop. And it will stop when either Putin decides that, war is over, or it's forced to get to that conclusion, because to make a war, it takes resources. And the West is putting a lot of sanctions into blocking him and cornering him to make that decision. So if all of a sudden we hear, we listen to a news that, well, either he's, stepping back, either he's dead because he gets shot or assassinated somehow, which I'm not wishing, but you can kind of get the point. If we hear something pointing to the fact that war is going to end, then market is going to react like boom, the exact same minute. So that's one. Two, China also is already showing signs, at least Shanghai is already showing signs of, we didn't have new COVID cases, or we had 0 COVID cases for a couple of days. So this is going to the right direction, all right? So that also will continue to improve, and when improve, because they cannot simply be locked down the entire rest of the year. And when that happens, well, it's going to provide a sign of relief for the market to continue to, go back up, because it means less uncertainty, more direction and clarity ahead what is coming. And then we have the Federal Reserve about inflation, because inflation also is not showing signs of relief, but at least it's showing signs that it is not going back up. So at least, even if it's remaining high, it is slowly expected to go down. So in the next coming 3 to 6 reports around inflation coming from the consumer and also coming from the producer, so CPI and PPI, I am expecting, with supply chain issues also smoothing out, that inflation will start going down, at least to a certain level where the Federal Reserve is going to be confident into not shocking the system, not shocking the economy by destroying the demand with high interest rates every single month. If we only have one of these 3 scenarios happening, if we have one of these 3 risks, being a no risk, it's going to provide a relief that people are going to be, finally, some news. Let me put the money back into the market. All right. So that to me is the 3 risks that are ahead of us. And once we have signs of relief around one of those other 3, which will even be ideal, then we're going to have another run. And all of these stocks that are in oversold territory right now, that are in trash territory right now, especially in high growth, and even stocks that are quality stocks like the energy sector, the food companies, everything's just beaten down. So everything's going to start to run up. So that is when. I cannot put a date there because nobody can. And if anybody try to tell you that, then it's clearly, in denial, because nobody can predict the future. But at least we can use what happened in the past and try to make an educated prediction or an educated guess, because trust me, market on a long run tend to go up because the economy grows, because companies improve themselves, and everybody, win along the way if you are invested.